welcome. You're watching Business Today Television. This is Market Today. I'm Sakshi Batra. With me is Shail Bhatnagar. Well, the benchmark equity indices snapped a two-day gain to close lower on Wednesday. The index not only failed to defend that 25,000 mark that we had gained just a day back, but at one point even broke below the 24,900 mark as well. And the selling pressure came from all corners, be it metals, autos, PSU banks, the CPSE index, or even the Nifty bank as well. We did see a sharp sell-off in yesterday's trade. And now the question is that are the traders really positioning themselves to use any bounce on the Nifty as a means to exit their positional longs as well? And remains to be seen whether that again could be the case today, because the handover is positive from the US and the Asian markets, and whether even if we open higher today, will we see a similar course? Good morning to all our viewers and good morning, Shail.
Good morning, ladies and gentlemen. We are on Thursday of the week, and as everybody knows, this is the weekly expiry day of the Nifty. Yesterday on Wednesday, we had a bit of a muted show, mainly on account of the sell-off, or just let's say profit booking that we saw on Nifty Bank, whose weekly expiry was on Wednesday. Today, most probably you will see a similar sideways to consolidating move on the Nifty, which as Sakshi points out slipped around 25,000 points. So this is what is most likely. I'll request the PCR as usual to start with our daily chart of the Nifty. Remember, we've had 2 days, which is Monday and Tuesday, a very smart burst in which the 50 EMA of the Nifty was tested and it went above the 21 EMA, which is a very positive development. But it is essential that bulls retain 25,000 points on the Nifty, and at the moment at 25,918, we are just a whisker short of that level. Now, what is most likely in trade today? Cues that are coming in from Wall Street, in particular Nasdaq, are very positive. So you should have a nice bounce back in Midcap IT, in frontline IT as well. More importantly, 3 major issues that were open for subscription in the IPO market have now closed their subscription. Bajaj Housing needs to be highlighted. I was hoping, and Sakshi and I were having this conversation, that the demand for Bajaj Housing would exceed 1.5 lakh crore rupees in terms of total subscription. Well, the 6,500 crore rupee IPO has been subscribed by 72 times. So the demand, ladies and gentlemen, has topped out. Never in the Indian equity markets you've seen a demand of anywhere between 3.5 lakh to 4 lakh crore rupees on a single issue, and Bajaj Housing has done that. So with that in the background, the mood and enthusiasm in primary markets is pretty good, but we need similar action coming into the secondary market space. Coming back to the Nifty and the Bank Nifty, 2 important things need to be kept into mind. For today's market, we'll be looking out on steel stocks. For one particular reason, the government of India has raised import duty, which is to protect the domestic industry. Therefore, counters like Steel Authority of India, JSW Steel, Jindal Steel and Power, Tata Steel in particular will be in action on the long side, and they have been sort of at the receiving end of very heavy selling pressure over the last 2-3 months. If you look at the CNX Metals Index, that has underperformed the Nifty, as also many other indices like the Nifty Pharma and the Nifty FMCG. About a month ago, I had pointed out that you will see money moving into pharma stocks. That move has turned out very well, and from now on you will see money moving back into metal stocks. This is the sectoral rotation that is happening. Therefore, keep an eye out on stocks like Steel Authority, JSW Steel, Jindal Steel and Power, Tata Steel from the steel pack. Look out for Hindustan Copper, look out for Hindustan Zinc, look out for raw material suppliers such as NMDC and many other such companies. That is a sector that we'll be keeping an eye out on today. Also, Root Mobile, another block deal in the offing on this particular counter, and we'll keep an eye out on this one too. Sakshi, what are the cues coming in from Wall Street? What are you observing?
So reversed an earlier sell-off they saw in their morning trade to close higher on Wednesday night for us. The Brent crude oil prices rebounded from their 3.5-year lows as a key inflation report cemented expectations that the US Federal Reserve will now issue a 25 basis point rate cut next week at least. All the three major US indices they did a U-turn, transforming the sell-off into a rally by mid-noon. So the tech stocks, particularly the chip stocks, they were the clear outperformers. They put the Nasdaq ahead of the pack. The S&P 500 and the Nasdaq we did see end by over 1%. It was the Nasdaq that ended by over 2.1%. The Dow Jones ended with gains of 0.3% higher in trade as well. But like I said, the US crude also jumped 2.3% to settle at $67 per barrel. The Brent crude also settled at $70.6 per barrel. That was also up by over 2% on the day as well. Gold prices dipped as hopes dimmed for a larger interest rate cut from the Fed at the next week's policy meeting. The spot gold dropped by 0.2% to $2,512 an ounce. And following this, we've seen that the markets in the Asia Pacific region have also opened higher on Thursday. So the Nikkei has jumped by over 3% in the early trading session. That's a sharp jump for the index. Kospi also is up by 1.2%. The Hang Seng is up by 4.4% as well. We've also seen the SSE composite also is up by about 0.3%. And following this, the GIFT Nifty trends are already indicating a positive start for us above 25 odd levels as well. So we'll keep an eye out on that. The overseas investors, they've remained net buyers of the Indian equity markets for the third consecutive day. On Wednesday, FPIs have mopped up equities worth about 1755 crores. We've seen that the domestic institutional investors, they've also turned net buyers right after a days of selling, and they bought equities worth about 230.9 odd crore rupees as of yesterday's trade. We'll also keep an eye out on a slew of stocks that will be in focus today and in news. HPCL is in focus. The company has approved the construction of Visakhapatnam Raipur pipeline project worth about 2,212 crores. It has revised the cost of the refinery modernization project to also 30,609 crore rupees. So keep an eye out on HPCL. NBCC, the company has signed an MOU worth 1,600 crores with MTNL to develop a 13.8-acre land parcel in New Delhi. Tata Steel will be in focus. The company has reached a deal with the UK government regarding previously agreed £500 million grant for its green steel project in Port Talbot. The £1.25 billion project is expected to be operational within 3 years and aims to preserve about 5,000 jobs. So keep an eye out on that too. Adani Ports will be in focus. The company will develop a multi-purpose berth at Gujarat's Kandla port, having signed a concession deal with the DPA. The new berth will handle multi-purpose cargo as expected to commission in FY27. Auto stocks could be in focus with the Union Cabinet now approving two major schemes, the PM Electric Drive Revolution in Innovative Vehicle Enhancement, or the PM E-Drive, and the PM E-Bus Seva Payment Security Mechanism, the PSM, with an outlay of 14,335 crores to promote the use of electric vehicles, including buses, ambulances, trucks. So the stocks of auto manufacturing companies will definitely be in focus today. Vedanta could be in focus. The company has raised $900 million through a US dollar bond issue to prepay the existing debt. SEAT will be in focus. The company has inaugurated a new truck bus radial production line at its Chennai plant, which will boost its daily production capacity, enhance the global market presence too. Engineers India could be in focus. The company has secured new orders worth 4,681 crores in the first 5 months of FY25, marking a 37% increase in the previous year. Nazara Tech would be in focus. The gaming company has acquired 15.8% stake in blockchain-based esports startup Stan for $2.2 million. The platform focuses on mobile-first fan engagement and digital collectibles. Metal stocks, as Shell has pointed out, will be in focus also because the government has imposed tariffs between 12 to 30% on some steel products imported from China and Vietnam. We could also see some block deals that could take place on Honasa, so keep that in mind, and Root Mobile as well. There could be some big block deals that could be taking place. So these are the stocks that I'm keeping an eye out on, Shell.
8:42 p.m. 8:42 a.m. ladies and gentlemen. We'll be shortly joined by Mr. Devin Choksi, Managing Director at DR Choksi FinServ, and a little later by Mr. Ratnesh Goyal, Senior Technical Analyst at Arihant Capital Markets. This is a good time to look at some stocks on the weekly basis which have done a fantastic work as far as markets are concerned. We'll pay attention in particular to the Bajaj twins which have risen dramatically over the last 1 week or so. Bajaj Finance at about 7,366 is the top performer, up about 3.5%. Look at Hindustan Unilever. This has gone up by about 2.3% in the past 1 week at about 29.13. It had gone above the 3,000 rupee level, and more importantly, what is really important for this particular space is that it's not just limited to Hindustan Unilever in the FMCG space. Look at ITC, look at how changes have happened on Godrej consumer products, look at how moves have happened on Dabur. In fact, it is as a sector only FMCG that has shown a positive change when it comes to the weekly picture of F&O. We track 14 sectors for you in F&O, and it is only FMCG which is up 1.4%. While we look at gainers, we also need to pay equal importance to those stocks that have lost ground, and it's the oil and gas space. On a sectoral basis, oil and gas is down 6.1% in terms of F&O, and of course it's the fall is led by ONGC, mainly on account of a sharp drop in crude oil prices. Sakshi, any brokerage upgrades that you have?
Yes, absolutely, Shail. We will be looking at a whole host of those brokerage updates even today. So I'm keen on looking at Zomato again. UBS has come out with a report on how the industry volumes have been growing month on month in August by 2.5% on a month on month basis. The order growth also for Zomato, they believe, is of 1.8%. However, it lagged Swiggy's order growth of 3.1%. They've said Zomato's August 2024 volumes versus December 2023 are already up 25% versus Swiggy is 18%, so higher than Swiggy in that respect. They've now estimated Zomato's Q2 FY25 GMV growth at 7% sequentially, and they've given the target price of 320 on Zomato. On MGL, Jefferies has come out with a report. Here they have increased the target to 2,120 versus 1,990. They believe the volume growth outlook is improving. MGL margin defense is better than the peers, and in the city gas distribution place, Mahanagar Gas is their preferred pick too. On BEL, Morgan Stanley has come out with a report. They have an overweight rating, a target price of 364. They believe the new order wins of 11.5 billion rupees has secured an order worth 8.5 and it's also secured an 8.5 billion rupees order from Cochin Shipyard, and they've also been securing orders from navigational complex systems. This continues to put the ball rolling for BEL even going forward. Apart from this, Ola Electric is again on brokerage houses radar. HSBC has now come out with a buy rating and a target price of 140 on Ola Electric. They believe Ola's recent market share loss is worrying to us and could be due to the ramp up of the low cost variance from competition. If the current market share trend sustains, it could mean 15 to 20% downside risk, with a volume estimate for FY25 and 26 also at a downside risk as well. However, they still have that 140 target on Ola Electric, which is higher than the current market price of 113 rupees. On PNB Housing, Morgan Stanley has come out with an overweight rating. They have raised the target price to 1,500 from 1,025, and they believe as the loan growth, ROA, ROE expansion is seen, they also see the rating going forward from here. Nomura has come out with a report on EMS space. They've initiated buy on Dixon Technologies with a target price of 15,567 and initiated a buy on Keynes Technology as well with a target price of 5,969. They believe the tech boom will create new global leaders going forward, and it is the ideal landscape for harnessing growing domestic market and export potential within these companies. Shail.
Ladies and gentlemen, absolutely the right time to welcome our dear friend Mr. Devin Choksi, Managing Director at DR Choksi FinServe. Namaste Devin ji. A very warm welcome. Let's start with the pain point that the market is facing globally, which is crude oil prices dipping to below December 2021 levels. Is this a cause for concern? Is this something that might trigger a very sharp sell off globally? And what if there is a disappointment from US Federal Reserve? People are expecting for a 50 basis point cut. I 25 bina. How do you see this scenario?
Yeah, Shail, good morning. Uh, well, I think that's a wonderful news for people like us in India that crude oil prices are coming down. On the one account, we will have the country's balance sheet getting significantly boosted because of the lower crude oil prices, because of which I think our current account deficit will remain under control. And at the same time, I think India, which is right now on the capital expansion mode currently, government is spending big time money in building the infrastructure. What can be better music to your ears when I think you look at the crude oil prices remaining at a lower levels? Because of the lower crude oil prices, the energy cost comes down, and because energy cost comes down, overall cost structure in the economy also comes down, which also results into lower inflation and lower interest rate eventually. And at the same time, because of the lower energy cost, the commodity prices comes down. The metal commodity prices, the chemical commodity prices, in fact, all commodity prices would remain under control. And that's a good news for inflation, that's a good news for interest rate as well. For us, I think this is a very good omen, as I would call it as I think if the crude oil prices are down, it should sustain at lower levels. Now, I think the another challenge you should everybody may argue for that if the prices come down, what happens to the company's books in a shorter period of time? Yes, I think in a shorter period of time, I think you might see a pain in the books of the company, wherein they may be carrying the high cost of inventory, and I think they may have to provide for mark to market on that inventory in a given quarter or a situation, even though their sale may get materialized, I think at a older price. Still, in order to do accounting adjustment, I think they may have to provide for mark to market in the books, which is not actual loss. So 1 or 2 quarter of pain, depending on company to company, what kind of pipeline inventory they have committed. I think that may be a challenge I think that they may face. But overall, in my viewpoint, lower cost of production, lower cost of buying the produce, I think for B2B as well as B2B to C kind of players, in my viewpoint, I think is excellent opportunity for corporates to maintain their profit margin and grow their profit margin. So remain very confident about the eventual outcome of this lower crude prices.
Very good morning to you, David sir, and warm welcome again. And I wanted to first ask you about this Bajaj Housing Finance IPO. You know, the ask was 6,500 crores, and what they have got is over 3.5 lakh crore rupees, making it the most subscribed IPO in the history of Indian markets. What do you make of the kind of demand scenario that is existing in the primary market space? Of course, there will be a whole host of disappointments tonight when the allotments will come in, and most of the people will not get it, and will now then look at probably the listing gate to kind of as an opportunity to buy into the listed space. But looking at the valuations again, looking at the subscription, the GMP as well, it could be a blockbuster listing too. How would you advise the retail investors to really look at such scenarios?
Yes, actually, good morning. Uh, 1,20,000 crore is likely to be the market capitalization on listing based on the grey market premium that we are currently witnessing in the markets. So if 1,20,000 crore is the market capitalization on listing, out of which 12% of the market cap will remain with the public shareholders, balance 88% of the market cap is going to the company, because I think the shareholding post IPO of Bajaj Finance will be remaining at around 88%. So, given that scenario, more than 1 lakh crore worth of market cap gets added to the books of Bajaj Finance. So, on the one side, we have Bajaj Housing Finance, and because of which I think the benefit goes to Bajaj Finance. Bajaj Finance current market cap is 4.5 lakh crore, out of which I think more than 1 lakh crore will belong to Bajaj Housing Finance. This could be a fantastic news for even the stock price of Bajaj Finance itself. Leave aside, I think, Bajaj Housing Finance. In a way, I think it's a good beginning as far as I think the new housing finance company IPO is concerned. Largely because of the fact that I think a pure focus housing finance company after HDFC is basically going to get a significant amount of presence in the portfolios of investors. And that's where I believe that I think this one company will be eventually looking at entering into majority of the mutual fund portfolio, insurance companies portfolio, including the retail investors portfolio, and people will stay invested into this business. That is what my take would be. So a good possibilities going forward. Though I think on listing the valuation will be a bit expensive, but well, market give you opportunity to rationalize the valuation. So during that period, you should be adding to the portfolio as well.
Yes, I think the grey market premium is almost 100% on the issue size of 70 rupees. And let us see who are the lucky folks. If you were a Bajaj Finance or a Bajaj Finserv shareholder, you would have got a confirmed allotment. But those who don't have Bajaj Housing, they can look at the holding structure of Bajaj Housing and look at Bajaj Finance. Bajaj Finance, by the way, has done very little over the last 2 years or so. So maybe that is the kicker that was awaited for Bajaj Finance shareholders. That value would be accretive given the strength you have in Bajaj Housing. They went by two sectors, the steel space, which now the government has protecting, and this sharp sell-off that we've seen over the last 3 or 4 months on steel, raw material suppliers, and of course finished product makers. Are there any favorites in this sector which you are now looking at, given the possibility of now improving margins and of course higher profits in the coming quarters?
Yes, I guess I think the metal exact space I think is looking interesting. See, commodity has a typical nature. It behaves quite wild, I think, in a given situations. In my viewpoint, I think the current situation of crude oil prices going down, energy costs going down, and the demand scenario remaining a bit for the metal commodities, I would think that overall it benefits to the steel sector. Maybe in a 1 quarter or so, I think you might see a negative impact because of the price fluctuations on either side. But that leave aside, I guess I think the lower crude oil prices and the lower metal prices is a good omen for most of the steel manufacturing companies. So we remain bullish about the possibilities going forward. And fluctuations we'll have to keep aside for a while. But otherwise, I think you find that I think the correction in the stock prices, it means an opportunity to buy into some of the steel manufacturing companies, the larger ones like the Tata Steel, which I think relatively more stable, or even for that matter, other materials in commodity space, likes of Vedanta, likes of Hindalco, or even for that matter, Hindustan Copper. I guess I think they look relatively more stable in this current environment to buy into the portfolio.
Devin sir, how are you looking at the entire auto space right now, with the inventory levels surging, discounts rising across the board, from ICE vehicles to EVs as well, government supports coming in, but at the same times, why are they not getting picked up from the shelf, and what does that mean for the entire auto space and the investors?
In a little bitter tone, I may say that I think the roads are the culprits. I think the today the buying power with the customer is so high that he would have definitely bought vehicles. He could not have even, I think, the pile up of inventories. Unfortunately, in every major city that you travel, I think the roads are all chalk. This we talk about Bangalore, I think it's better. I think this we talk about other cities of the country, it's better. Because of, I think, these conditions today, I think even the customer is having a buying power, he is not buying the vehicle. And that is the resultant outcome of this particular glut in the inventory position. In my viewpoint, I think leave aside that subject for a while and I think start looking at what is the next outcome. I think companies like Tata Motors in the passenger vehicle portfolio is flushing out the inventory very systematically
Yes.
because of two reasons. One, on the other side, they are finding that the cost of raw material is coming down. So obviously, I think they're going to get benefited because of the lower cost of input. And on the other side, I think if you clear the inventory from the balance sheet, then probably I think you are likely to see the faster turnaround happening in the books of the company eventually. I think they are doing relatively a smarter job, as I can see that. Otherwise, I think the electric vehicle segment remains absolutely convincing. With the government renewed focus on 10K, definitely I believe that I think it's going to be all the more advantage to the companies which are pure focus EV companies eventually, and I think that should give them better boost going forward.
This was my next question to Devin Bhai on the prospects of Tata Motors, which he has answered very well. Tata Motors, ladies and gentlemen, is the top loser in the automobile F&O zone, down 12.3% so far in the month of September. We'll be keeping an eye out on this counter, but this is as good a time as any to welcome Ratnesh Goyal, Senior Technical Analyst for Arihant Capital Markets, as far as charts and derivatives are concerned. Namaste Ratnesh, a very warm welcome to you, sir. Any two stocks that you're looking at in terms of outperformance in Thursday's market?
Very good morning everyone, and definitely there is some two stocks I have, one from the F&O space and one from the midcap space. So one is the the IEX continue making the high right formation. So I believe that this outperformance is still remain continue for this stock. So keep the stop loss around 205, and we can see the target around the 220 or 230. And the second one is the Zegal. Zegal has given the fantastic breakout in the yesterday session, and we can see the the classic rounding formation on the daily chart. So Zegal can outperform in the mid cap counter. So keep the stop loss around the 395, and we can see the much higher target in this for the short to medium term. The target could be around the 460 and the 500 rupees.
Right, ladies and gentlemen, the pre-open has clicked in. The Nifty is opening in the green, just as the GIFT Nifty had suggested, 27 points higher, 24,946. Remember, today is the weekly expiry of Nifty futures and options, and the index on a 5-day basis is actually down about 1.2%. We'll keep these broader thoughts in mind, that this could also lead to a short covering in the market. Now, what is clicking and clicking well? It gives me great pleasure to mention HDFC Bank, the highest weighted counter, 35 rupees higher, 1679. I also have grave doubts whether this bounce will continue or not, but let's hope it does. Ladies and gentlemen, Bajaj Finance, 78 rupees higher, 7423. Bajaj Finserv, 11 rupees higher, 1845. This is the afterglow of the huge oversubscription that has happened for group housing company Bajaj Housing. Okay, a strong move coming in on the Nifty now, 120 points higher, 25,033. The battle for supremacy between the bears and the bulls will be fought at 25,000 points today. Reliance in the green, 7 rupees higher, 2910. And let's look at ICICI Bank, 3 rupees 60 higher, 1240. And of course Infosys, almost a rupee higher at 1911. So 4 index heavyweights, HDFC Bank, Reliance Industries, ICICI Bank and Infosys are in the green. This augurs very well for the thought that I have implanted into your mind, that it is going to be a day of short covering. Sakshi, no stopping Suzlon, another 5% higher at 8604. Remember, this is again the glow of that sell-off of their Pune headquarters and successive order wins that have sort of come into the stock over the last 2 or 3 weeks or so. What else is buzzing in the green? You have Balrampur Chini, 3% higher, 569. All bus makers, Electra Green, 2% higher, 1649. This is the news that Sakshi had pointed out in terms of the EV thrust that the government is doing. Let's look at the most active counters. Block deal on Honasa, the counter 4% lower, 504 for you. You have a nice move which is coming into Union Bank, I wonder why. 4.8% higher, 123. Quest Corp, this is a stock that was highlighted by Sharad Avasthi yesterday as a part of his fundamental pick. 2.6% higher, 810. Nothing much to talk about otherwise, but let's again revisit the winners list. Okay, Jindal Saw. I want to see what metal is doing. This is something that I have highlighted. Okay, across the board we have a sea of green. Steel Authority 2.6% higher, 130.3. National Aluminium 1.4% higher, 174. Tata Steel, Jindal Steel and Power, JSL, Hindustan Copper, all in the green. This is how markets have settled in opening trade. Sakshi, it's taking it away. 133 points higher on weekly expiry, 25,053. It's a day that will start with short covering, and let's hope that the Nifty ends on a day's high. Ratnesh ji, what will be your top pick in the metal space?
Metal specs, it was underperforming from the quite some time, but definitely we can see the some bounce, or you can say the some short covering in this sector. So I will go with the the outperforming stock, the JSW Steel. So JSW Steel, after the some consolidation, we can see that we have taken the good support at the short term around the 910. 910 and 918 level. So it could be the good. This is a good, the risk reward ratio in the favor also for this stock. Keep the stop loss around 910 for the target 960.
Okay. Let's also look at Varun Beverages as well. I think the stock is ex-split today, so keep an eye out on this one. Right now, it's indicating a percent uptick right now on Varun Beverages. So again, that's the adjusted price that you're seeing. Look at it in the way of, like, it's an uptick definitely of about 1%, because it's seen that 1:1 division right now. But let's also keep an eye out on some of the other stocks like HPCL. Remember, the company had approved the construction of Visakhapatnam Raipur pipeline project. I wanted to just see how that is doing. Even BPCL, so a percent higher for HPCL. For BPCL, its subsidiary Urja Bharat Private Limited has been awarded production concession in Abu Dhabi. So that stock is also opening about a percent higher in trade. Let's also look at NBCC. The company signed MOU worth 1600 crores with MTNL. I think that's also indicating a positive start for the markets today as far as NBCC is concerned, about 0.7% higher for this one. Tata Steel, let's look at that after the UK government has done a deal with Tata Steel regarding the previously agreed green steel project Port Talbot, about 2% uptick for this one too. Let's also look at some of the other stocks like MGL. I wanted to focus on. Jeffries came out with a report with a higher target within the city gas distribution space. So let's look at how that one is indicating. The target price was 2120, about a 0.7% uptick can be seen on MGL right now. BEL, let's again look at. Remember yesterday, it was an outperformer within the PSU pack and the defense pack. One of the rare stocks that was up within the entire pack that was down yesterday. So BEL is also opening about a percent higher after Morgan Stanley's overweight rating and a 364 target. Let's pull up Ola Electric to see how that one is also reacting. Of course, there is this government news, so we've pointed out Electra Green Tech and JBM Auto. Those are up. Even Ola Electric is up by about 1.4% on that HSBC report right there. Let's get Ratneshji to talk about the two-wheelers, the electric wheeler space. And where is he really keeping his focus? We are seeing both Hero Moto, TVS Motors, Ola Electric, all of them up and about with the PM e-drive scheme. We're also looking at the EV buses providers like, Electra Green Tech and JBM Auto also up and about. How would you look at this entire auto space, and where would you place your bets for today?
Definitely, we have seen some outperformance in this sector even the yesterday also. So we can see that the outperformance stocks of Bajaj.
Yes, please continue.
We can see the outperformance in the Bajaj Auto. So Bajaj Auto, that I prefer the one. This will the Bajaj Auto will continue the outperforming. So definitely a little bit stretch on the chart, but still, if someone holding this stock, we can see the some more good up move in this stock up to the level 11,000. 550, 11,600 level. So keep the stop loss around 11,300 rupees around. So I can see the Bajaj Auto can outperform in this sector.
Okay, two stocks from the electronic manufacturing space, Dixon Technologies and KNS Technologies. This is again an upgrade coming in from Nomura. The issue with these stocks is that they are so high priced and with such high ticket and extremely high valuations, it's very, very difficult to sort of suggest what to do. Nevertheless, we will mark them for the benefit of all. Dixon 2% higher, 13,000. Needless to say, this is record high. And KNS Technologies, again, you see a 2% uptick coming on this stock as well. I am slowly but surely moving towards the small cap space. You have Electra Green Tech. This is the 10,000 crore rupee move that has come in on the EV space to replace commercial vehicles by the Prime Minister's office, 2% higher, 1650. At the same time, I'd just like to see what Sona BLW is doing. This is one of the very well known auto ancillaries which is in this space, Sona BLW. Okay, we'll mark that price, 719. They just raised about 2,400 crore rupees when it comes to a QIP. Let us see what happens beyond that. What else is moving? Canfin Homes and PNB Housing. Please keep an eye out on this one. And of course, there's no stopping IEX. Ratneshji, this is for you. 215, 1.5% higher. We've been following IEX from at least 150 rupees. What are the charts of IEX telling you?
Yeah, so this one is my morning pick. So definitely, as I mentioned, that it is making continuous high formation. So I believe that definitely I believe that the worst is over for this stock, and we can see the some good upside move in the medium term. So if someone take the view some medium term, we can see the target even the 240 245 level also. But in the the near term, we can see the target 225. So keep the stop loss which we mentioned in the morning 205 210, and for the target near term 220 225.
Okay, got it. Let's again look at some of the other stocks that are on the move. Then within the broader markets, I see GET&D, that's up by 5% in trade. Remember, that was also newsbound. It's one orders, and that stock is also higher in trade today. Let's also look at some of the other stocks that are on the move then. Let's look at the Nifty Next 50 stocks. You have Zomato now, that's inching further higher, 1.7% up. रत्नेश जी, जोमेटो पर क्या करेंगे? लगातार हायर टारगेट्स आ रहे हैं ब्रोकरेज हाउसेस की तरफ से, रिकॉर्ड हाइस के बाद भी क्या और तेज़ी बनती है यहाँ?
बिल्कुल, जोमेटो इफ यू लुक एट द डेफिनेटली जो हम देख रहे हैं काफ़ी अच्छा इसमें परफॉर्मेंस आउट परफॉर्मेंस हो रहा है, तो मुझे ऐसा लगता है डेफिनेटली वी कैन सी द this outperformance will remain continue for some more time. So if someone holding from the lower level, keep the stop loss around the 245 240 level. We can see the target around 325 350, but maybe we can see some consolidation before that, and then we can see that target, but keep the stop loss 240.
ठीक है. All the sectors are up into the green. That's what it is being indicated in the pre-opening trade led by the metal space, as Shail had pointed out, 1.3% higher. PSU banks could also be recovering from last few days' lows. About a percent uptick is what it is being indicated. Beyond that, IT, Midcaps, they could also be in the limelight. Within the metals pack, Tata Steel, Hindalco, they seem to be opening higher in the Nifty pack. Within the other stocks, within the metal pack, even Steel Authority could be in focus. NMDC could be in focus today. They're all indicating a positive start for the Indian markets. Within the PSU pack, apart from this, oil and gas space entirely will be in focus today. And we're also looking at BEL that I had pointed out, again newsbound, so about a percent higher for this one too. BEL का चार्ट क्या कहता है अभी, रत्नेश जी? क्या इस स्टॉक में अभी भी तेज़ी बाकी है अभी?
You're asking about B here?
Yes, Bharat Electronics.
तो बिल्कुल आप देखेंगे थोड़ा सा इसमें काफी टाइम से इसमें काफी अच्छी रैली के बाद में कंसोलिडेशन चल रहा है, थोड़ा सा की एवरेज के नीचे अपना ट्रेड करा, बट आई थिंक वी कैन सी द सम कंसोलिडेशन। अभी मुझे कोई नेगेटिविटी चार्ट में नहीं दिख रही। 290 270 इज अ गुड सपोर्ट लेवल, सो आई बिलीव दैट अभी जो कंसोलिडेट करेगा इट कैन कंसोलिडेट बिटवीन द रेंज 300 to 270। वंस इट क्रॉस द 307310 वी कैन हमें वापस एक नई तेजी देखने को मिल सकती, तो जो 340 350 360 तक वी कैन सी द टारगेट। सो एज ऑफ नाउ अभी मुझे ऐसी कोई नेगेटिविटी नहीं दिखती। कीप द स्टॉप लॉस अराउंड 270।
9:13, ladies and gentlemen. We are just 2 minutes away from this very strong opening that is likely to happen on the Nifty. And my very good thought today is that we are going to see a blowout, which means the Nifty will start with a gap up of 141 points, and then the short covering will start, and the index will end on its day's high. Remember, it started on a back foot of a weekly negative change of 1.2%. Today is the weekly expiry. And Sakshi, good news, all 10 index heavyweights and super heavyweights are in the green. This is going to be a great start, at least for the markets. When you look at the entire Nifty 50, let's look at winners. I think the advanced decline ratio on the Nifty 50 in the beginning of trade is, hold your breath, 50s to 0. All 50 stocks are in the green, led by metal counters. Tata Steel 2.5% higher, Hindalco 1.6% higher, Wipro HCL Technologies, which have been taking heart from the Nasdaq 2% jump, are opening about 1.5% higher, and it's likely to be a day for Bajaj Finance. We'll keep this an out, 1% higher. Okay, prices have opened, ladies and gentlemen, and across the board all I see is green. Let's look at the super index heavyweight category. What is the top gainer here? Infosys, you have about 16 rupees higher, 1926. Let's look at Bajaj Finance. That's the only stock that I am bothered about today. 45 rupees higher, 79.98, 73.98. HDFC Bank 7 rupees higher. You have Reliance 2 rupees higher. The Nifty is now 115 points higher. 200 point gap up on Nifty Bank, 460 point gap up positive on Nifty IT index and NSE 500. The key index that we watch these days is opening 6.6% higher. Across the board, ladies and gentlemen, you have a very strong move. The opening advanced decline quote is 1750 shares in the green, 275 shares in the red. Needless to say, the metal index is the top gainer, 1.7% higher, and all 19 indices that Sakshi and I track for you are in the green. Very quickly, we'll just go through stocks. Varun Beverages, top gainer, readjustment of stock split, 5% higher, 655. Suzlon, 5% circuit. Electra Green Tech 4% higher, 1687. NBCC 2% higher. We'll very quickly get into the metal space. Ratnesh, I'm coming to you. Please get your top metal stock ready. It should be Tata Steel, driven both by news and of course the changes that are happening for the positivity in the UK. Ratnesh ji, what will you do with Tata Steel and anything else that catches your attention?
Definitely, Tata is still, the still some underperformance going out. Is still at below the 200 moving average line. So I just wait to cross the 153 level. Once it cross the 153 level, we can see the target 156 and 160 level. So then I will keep the stop loss around the 150. So just wait for keep the let the cross the 153 level, then we can see the target 160, 150. My best pick will be around the National Aluminium from the metal pick. So National Aluminium, the continue is still outperforming the stock. So keep the stop loss 169, 170, and we can see the target around the 186 level.
Okay, got it. All right, PSU banks, they are also in thick shape, 1.3% higher in trade. Strong moves being seen on Union Bank, Indian Bank, Canara Bank, PNB, SBI, Bank of Baroda, all upwards of 1% to almost 2% higher in trade. A bounce back coming in, Ratnesh ji, on the PSU banks. Will this be sustainable?
As of now, the Bank Nifty from the quite some time has underperformance, but still we have to wait for the next 5 to 10 minutes for sustainable move. So I will just wait for the next 5 to 10 minutes, then we can see that this gap up open is sustainable or not.
Okay, Zomato 2.3% higher, 277.9 right now. How would you look at Zomato? Should one catch this momentum?
Yeah, as we discussed in the morning, definitely the Zomato is definitely the outperforming stock, and everyone should have this stock in the portfolio and should not miss this stock. Still, there is a risk reward ratio in the favor. As we mentioned, that keep the stop loss 240, and we can see the target in the medium term 350, 325 level.
Okay, ladies and gentlemen, 25,000 is with the bulls. There is a very strong move now in Bank Nifty, 200 points higher, and as I have said, the star attraction is the NSE 500 for us these days. A very strong move coming in. Top traded Honasa, a block deal. Already 1900 crores worth of transactions have happened. Stock is down 5%, nothing to be worried about. It had rallied very sharply, 496 for the price. You have Suzlon, surprisingly, very heavy volume, 216 shares, 216 crores being traded on the circuit of 5%. What else is moving in strength that I would like to highlight? These are all micro companies which are showing 5% circuits. I'll stay away. But GBM Auto, again a bus maker, and the EV theme working very well. JBM Auto is now 5% higher at 2018. New highs, okay. Kalyan Jewellers 2% higher, 670. Bajaj Auto, Shriram Finance, and of course a strong move coming into Cholamandalam Finance, 2.6% higher, 1560. A sharp breakout on a company called FDC. This is something that I have highlighted. This is a pharma company whose product all of us have consumed as kids playing in the sun. It's called Electrol. A very sharp breakout happening at 608. This is a record high. Sakshi, what are you watching?
Well, a whole host of stocks even within the F&O space, especially the pharma pack. Aurobindo Pharma is making a sharp comeback, about 3.5% higher in trade as well. Apart from this, Nalco from the metals and mining space is up 3.3% up. Tata Steel is doing well. NMDC is also pulled up. So definitely it's the metals pack that's garnering all the attention. L&T Finance and Chola Investment and Finance are also buzzing in the F&O space. Ratnesh ji, F&O mein, what will you do?
Sorry, I can't hear you. Which stock name you
In the
asking?
F&O space, there is a lot of buzz. Which stock will you pick up?
Yeah, so as the morning we discussed about the National Aluminium and the IEX. Apart from that, I will go with the some more stocks like the LIC Housing Finance. So LIC Housing Finance
Okay.
definitely we can see the some technical bounce from here. It has taken the good support on 680 level. So keep that stop loss, and we can see the target 710, 715 level.
Okay, got it. Well, apart from this, let's also look at the mid-cap winners right now. What else can we figure out? Ashok Leyland is pulling up in trade, 2.4% higher. You also have KPIT Technologies that's pulling up in trade about 2% higher. BHEL is also about 2% higher in trade. Then you also have stocks like PB Fintech that's up by 1.5%. Indus Towers and CG Power are also some of the other stocks that are pulling up. Max Healthcare is doing very well, 2.7% higher for this one. Within the mid caps, where will you look for momentum, Ratnesh ji?
my morning picker Zegal is definitely still outperforming the mid cap space. Apart from that, the EPEC is definitely one of my favorite pick, and the company is also good on the fundamental basis. So I believe that we can see the much higher target in the EPEC. Still, the risk reward ratio in the favor. Keep the stop loss around the 290. We can see the target around the 380 400.
Okay, ladies and gentlemen, it's getting better and better. We are at 9:23, and across the board, Sakshi, all I see is green, irrespective of sector, irrespective of market capitalization. You see traders and investors just opening their purses and shopping and shopping like metal mad. Nifty IT index, all 10 stocks in the green. I'm just giving you advanced decline numbers. On the NSE 500, this is what we track the maximum. Out of 501 shares, 407 are in the green. And the mid cap and the small cap index, all up, both of them are up about a percentage. Out of mid cap 100 index, 89 stocks are in the green. The small cap index, 84 are in the green. This is a wonderful time to look at stocks that have hit record highs in the morning. No stopping FDC. Ratnesh ji, I am requesting you to please take a look on FDC. I'll speak in detail about this particular stock. We'll do a chart check at a record high. There is still value to be had. Voltas flat 1839, but a record high. Sakshi Britannia, a change of digit, now above 6,052. Record high 0.7% higher. And one more stock, Indigo. 4,944.8% higher. Indigo, India's largest aviation player, is now going to launch business class to begin with on the Delhi Mumbai range, and over a period of time in the next 1 year you will see this getting extended to 12 routes. So this is a stock to watch. Sharp fall in crude oil prices, growing market share, festive season, near death of many competitors, and it's Indigo all the way. Ratnesh ji, first FDC and then Indigo. What are the charts telling you?
Definitely, FTGs continue making high formation, and still there is, I believe that still there is a chance to even for the fresh entry also receive what is in the favor for the fresh entry also. Keep the stop loss around the 570. We can see the target around the 660 700 rupees.
Yes. Okay, and Indigo is going to be extremely important to watch because now the management has also highlighted they want to aspire to be a global airline by 2030 as well. So that's also going to be something that we need to watch out for, growing ambitions for the domestic largest and most profitable company within the aviation space. Let's look at some more stocks that are garnering more attention. Bharti Airtel is picking up pace, 1.4% higher. I had marked Indus Towers also. Ratnesh ji, how are you looking at the telecom space? Is the buzz coming back within the entire space, or is it only limited to stocks like Bharti Airtel at this point in time?
Definitely, at this point in time, this is a limited to the Bharti Airtel, and it's continuing outperforming the stock. A little bit stretch on the daily chart, so for the patient, it is a little bit risky. But if someone holding from the lower level, keep the stop loss on the 1550. We can see the target 1650 or 1680 level.
Okay, so that's as far as the telecom space is concerned. But pharma is picking up strength, 1% higher now. What all is moving up? Oro Pharma I had marked earlier. It's now 4.4% higher at 1573. Torrent Pharma is 2% higher. Granules, JB Chemicals and Pharma, Laurus Labs, Zydus Life, Biocon, and also Lupin and Mankind Pharma. These are the movers within the pharma pack right now. Which stock would you continue to focus on for more traction from these levels, Ratnesh ji?
As you mentioned, the RO Pharma, definitely the RO Pharma is continue. The stock is continuing outperforming, and even every stock like the Cipla, Lupin, or Sun Pharma, every stock is outperforming the stock in the sector. So keep the stop loss 1520 1510 in the RO Pharma, and we can see the target around the 1625 1635. But apart from this, I like to mention in this sector, two more stock from the mid cap. The first one is the PPL Pharma. PPL Pharma is the stock which I liking more. So we can see the big target from this. From this level also, so keep the stop loss from the 200 levels. We can see the target 280 or the 300 level. And the second one is the JG Chemical Pharma. So JG Chemical is also looking good. To keep the stop loss from the 390 level. We can see the target 450 or 500 level.
9:28, ladies and gentlemen. I'm desperately waiting for the first 15 minutes of the trade to lapse so that we can take a view on the Nifty. Remember, after the first 15-minute candle has formed, only then does it make sense to either chase the momentum on above the high or below the low. Waiting desperately for 15 minutes to lapse, but look at how volume is moving, and this is where action is concentrated within the Nifty. Let's look at the top traded counter. Okay, Tata Steel, already 29% of 5-day volume has happened. Remember, this is I am talking about super heavyweights where there is a lot of liquidity. Already in the first 12 minutes, 29% of volume has happened. Shriram Finance, record high 33.38. This is running up on brokerage upgrades. Now let's move to NSE 500. Honasa, we've marked a block deal. We won't be worried about it. There is a very strong show coming on JBM Auto. This is again news driven. To you, Ratnesh ji, JBM Auto and Olectra Green Tech, what are the charts telling you?
Yeah, so first we'll check the JBM Auto. The JBM Auto definitely, after a very long time, it was consolidation around the 200 moving average line, the 50-day moving average line. So today we are seeing the breakout of these stocks. So today closing will be very important. 2075, 2080. This is a very crucial level for on the closing basis. Once we get the close above, we can see the fresh upside in this stock up to the target 2200 level, and then keep the stop loss around the 2000 level. And the second one is you are asking about the Olectra Green, right?
Yes.
Yeah, so Olectra Green is after the very decent upside move, we have seen some correction in this stock, but now it's we can see the base formation is going on around the 1500 level. So 1550, 1530 is a good support level. When they keep the stop loss around that level, and we can once it start trading on the 1700 level, we can see the target 1790.
Okay, Ratnesh ji, thank you so much for being with us on this very special edition to share with us all those thoughts and ideas and various stock strategies that you've suggested. Pleasure to have you with us. Time to welcome another guest on the show, viewers. We have now with us Mr. Manish Tangi, CEO and founder Mosaic Asset Management, joining in on this special broadcast as well. Mr. Tangi, warm welcome. We are, happy to have you with us, and it's at a time when a lot of nervousness is creeping in the investors' mind as to what is likely to happen with the markets going forward. Are we headed into a deeper correction, a long time-wise correction in the markets right now, and therefore, what should be the ideal strategy that investors must have right now? So, Mr. Tangi, there is this one narrative that, start building up on the cash pile and look for opportunities when the markets dip a bit. Are you also of that camp? Do you think there is some kind of a correction that we may be looking at with something we have not seen this year so far?
Hey, good morning. So, for folks who have been investing all along for the last 3 years, the only advice is to keep investing. If you're an SIP investor, perhaps you're entering in a little bit of a turbulent times over next 6-8 months, but that's precisely how SIP functions. That when you participate on higher markets, you also should participate on lower markets. Purely from a cyclical investor standpoint, because markets tend to at times, of course, respond to evolving economic conditions, both globally and locally, it's fair to say that economy both in US and India are entering in slow lane, uh, and that basically means that lots of data surprises, uh, be it with respect to consumption or general GDP growth or trade, would actually be on the negative side instead of positive, and market has no other option but to respond to it negatively. So I guess purely from a cyclical standpoint, it is very likely that over the next 6-12 months you will see disappointment. Also, because we are actually entering in this slow lane with relatively higher valuations, I think the disappointment could be actually steeper, bigger, so to say. So that's how I would narrate the prognosis for the market over the next 6-12 months.
Namaste Manish ji, a very warm welcome to you, sir. We often get very cautious voices on our channel as well, so as to balance the scales with the extreme momentum and froth, and with a lot of common sense, and therefore there is another welcome for you based on this premise. You've started the conversation on a very cautious note with Sakshi, pointing out possibilities of disappointment. Within your understanding, what are the two sectors where you feel possibly the earnings stop has happened in India, and over time you might see stock prices correct modestly or sharply?
So I will approach this, if I understood your question, because your voice is breaking. I understood your question as if you were actually asking me what are the sectors which could potentially be in distress, potentially, is what you're saying? Can you hear me clearly?
Yes, sir, that's perfect.
Okay. So
I can hear you
basically
clearly, sir. Your voice is loud and clear.
Okay, so the way I kind of think is that the biggest risk in the town for not just India but across is actually Chinese deflation. China is straddled with huge amount of overcapacity, and it is transporting deflation to whole world. Something similar to what you saw in 2015. So it is likely that whatever that Chinese produce and they do it well, those segments of the markets could experience a flood of those products coming in from China to rest of the world, depress the prices, and that would mean that actually margins will get compressed substantially. Now, this theme has actually played out over last couple of years. China has been in struggle, but at this stage, it appears at a point of a bit of a meltdown. So my fear is that anything to do with, let's say, manufacturing, where we actually compete with China, or our manufacturers are actually safeguarded by our duty structures, import duty particularly, I guess those segments would actually experience the steepest or deepest pain, so to say, over next 6-12 months. Because China doesn't appear to be in the mood of re-stimulating the economy in a manner that did in 2015 or 2009. So I think, this is what I will worry the most at this point in time. I think the other large segment of the market which actually go through a little bit of a stress is the personal loan segment. You are starting to see some basic signs of actually household stress starting to appear here and there. It's also apparent in slippages ratio of some of the NBFCs. So my sense is that folks in the financing segment who've actually grown very rapidly in the personal loan segment could actually experience substantial one slowdown, and two actually losses there, and market would actually punish them to that extent.
Okay, Manish sir, another thing that I wanted to understand is the fresh money. There is no dearth of liquidity right now. We are just seeing that how SIP flows have continued at over record levels of 23,000 crores. The mutual fund account holders have now gone past 20 crores as well, which means newer additions are still coming in. How are you then looking to deploy this fresh bout of liquidity in the current market setup right now? Where do you think one should be avoiding and where should be one cautiously deploying this fresh money?
So there are two parts to it. One, of course, it's important to contextualize that the surge in flows from retail towards market is not new. It's a cyclical phenomena. Back, if you were there in markets in 2003, 4, 5, 6, 7, you saw similar surge. Of course, the instruments were different then. Mutual funds weren't the recipient of large retail money. ULIPs used to be. So, in some sense, it has recurred in the past also, the kind of flow that we are saying, and it's cyclical in nature. My general advice at margin for investors is that there are opportunities in the non-equity space. Equities appear expensive. It's sort of remained expensive for the last 6 months. My sense is that a lot of people who are dialing in right now would experience low returns, more like 9-10% returns over the next 3 years. So it's better to sort of dial in bonds or credit. There you will get a little bit of a return parity without much lesser, what do you call, volatility.
Manishi, it is good for institutional investors such as yours who can, navigate this cyclical change in asset classes. How do you expect a retail investor in India to tap into the bond segment, maybe via mutual funds? How will they get into credit is something that eludes me. So, equities, even if they give 9% of average, will certainly have pockets of cheap relative valuations. How do you sort of answer this conundrum?
Look, if equity in aggregate has done so well, you can presume that any cheaper valuation that you look for is only cheap relative to each other, but in aggregate markets are expensive. That's point one. Number two, when you buy into an expensive market, you must remember this. Had you bought it in 1992 or 2007, in real terms, it takes 12, 13 years to break even. So, your markets don't even break even for 12, 13 years vis-a-vis inflation, and vis-a-vis bonds, they take even longer. So there is only one rule, and that is that you shouldn't buy expensive markets. For long run, you're going to take a lot of pain because of that. Now, how do you access bonds? If you can't access mutual funds in long duration, go to your neighborhood bank. Lot of these banks are right now offering flexi deposits at 8 quarter, 8 half level for 1 year. Uh, Park your money there for a year. If you aren't absolutely desperately wanting to go overweight equity, 8 quarter, 8 half is a decent, what do you call, bet to take for a year to postpone the decision to buy into equity. Please remember this, that while a lot of us may be okay with 9% of equity or 10% of equity return, equity intrinsically is not prepared for it. It is a 18-19% volatile standard deviation assets, precisely because of this, that if you actually offer a return of 9% versus an expected return of 15, it will actually have to collapse so that the incremental investors get 15. So please understand that the mechanism through which equity operates is to actually deliver the outcome which is near to the expected one. And if the outcome is likely to be lesser than what people are expecting today, market will have to correct substantially. And which is the reason, final point, that every decade you have 40-50% correction at least once, and 3 times odd 20-25% corrections. So I wouldn't be surprised if in next 12 months you see something similar to what we've seen in terms of deep corrections in the market. At least 15-20% correction is what I would imagine would happen.
Fair point. We are looking at maybe, let's presume, anywhere between 7 and 15% of a dip. Manishi, do you think this cut in crude oil prices that you see in front of us is one of those major indications why you might see a global sell-off in equities?
Again, your voice is breaking. What exactly are you linking to the global sell-off?
The fall in crude oil prices to 2-year lows.
Correct. So, crude oil price is actually a symptom of, what is the underlying momentum in the world economic growth, more specifically in US. There are other reasons, of course, yen carry trade unwinding, but in a sense, crude is a decent marker of at that point in time growth. And, given that it's melting down suggests that at margin, global growth impulse is actually weakening. Back in country also, you when you hear the PV sales slowing down, the inventory levels going up, a lot of other discretionary items actually going through struggle. All of them are suggestive that this festive season is likely to be sort of a dimmer one versus what we've seen. We've had, again, for context, we've had bombastic 2021, 22, 23 Diwali, So we've had great times, and this prognosis of weaker economy is not too pessimistic. This is the nature of how things are. You do really well for 3-4 years, and then there is a down year. You get tired, right? And so consumption gets tired. Economy actually gets sluggish, and then we will revive again after a year. So it's not a doomsday. It's just the way things are that, they rise, and until they flatline and start to sort of dip a bit, then the policy supports come in the form of fiscal stimulus or monetary policy stimulus, and that things revive again. So my sense is that 25 Diwali could well be very good again. It's just that we are going through some temperature check, of 6, 8, 9 months of distress in the economy, I would imagine.
Okay. Manish, also wanted to get a sense on this entire IPO bonanza that we are looking at in the Indian equity markets. How are, investors and AMC players like you looking at this? It's the busiest month of IPOs that we have seen in over a decade, with, of course, Bajaj Housing Finance, the IPO that's got record subscriptions over 3.5 lakh crores on an ask of 6,500 crores. SME IPOs is, of course, a different story, which begs a different debate altogether. But even the main board IPOs, with the kind of oversubscriptions that we are seeing, the demand that is pouring in, how are you looking at this, and what are you advising clients?
So oversubscription in IPOs are yet again a what you call contra marker. So again, be careful. This movie has run before. In all, the amount of excitement for equities right at the peak, at the peak of the cycle. So this is how human beings work, it seems. And so I wouldn't, it does not surprise me at all. People, and that's going back to the original point that while Shailin said that 9% is fine, but people are looking at the past and seeing that 15% return is what I got and this is what I'll get. You go to Twitter and meet a lot of people on in investor community actually thinks that 15-20% is given, and which is why they're participating in a lot of these things in a manner that they are. My sense is that they would get surprised on the negative side. There's far too much money, of course, like in what we saw in Bajaj Housing, but Bajaj Housing is still a sort of stable, decent, nice business. You could argue on the potential growth and the margins that they would have, which deserve the kind of valuations they're getting. But in SME space, even an onlooker can say that this is a pure bubble in making, and could actually have a catastrophe as and when the bubble bursts. So I would at least caution people to stay out of what's happening in. Of course, it's not a general statement. There could be some great SME firms, but otherwise, lots and lots of small businesses are being valued at crazy valuations. And investors won't get any return whatsoever in most of them.
Right. I think that's a very excellent phase of cautionary advice that is coming in from Manish. Let's focus on your PMS and your portfolio, Manish ji. Over the last 6 months, how much of cash have you raised? Have you reduced the number of equity shares in your portfolio? And given the temperament that you are talking about, have you added anything at all to the equity part of your own money and the money that you manage, sir?
So we sort of went long on US equity in a substantial manner. So we manage beta in a manner that, we dial in US local equity, local small mid caps, and local bonds. So these are the four assets that I kind of look at dispassionately and dial in only risk, which actually relatively looks cheap. So since December, Jan of last year, we had very large positions in US, and that we've been trimming. We think even US is actually peakish, and I wouldn't be surprised that US too actually delivers a 15-20% cut. And more specifically, tech there are more bearish. So generally, at margin, we've been cutting risk. In India, we are trying to hug, Nifty as much as possible. But overall beta is, half of what we would have otherwise in a bullish time. We are actually long-term bonds, both TLT, which is long US Treasuries, and long India bonds. And we think that bonds in India would deliver near 9-10% returns, long sovereign bonds over the next 3 years. And finally, I don't think a lot of investors of yours can actually dial in, but I think there is a case to be made that India private credit actually is a better opportunity to dial corporate than India equity. You can get 14-15% there easily. And there is a decent margin of safety available today, given that the fact that the balance sheets are squeaky clean in India. So that is what we've also dialed. So that's the portfolio incremental allocations that we would have had in last 6 or 12 months.
Okay, so basically you are sort of either into overweight into bonds, whether it is US or Indian. You've reduced substantially your equity exposure. Would you mind telling us as a percentage of your overall portfolio, how much is cash?
So we don't run cash exposures. It's a flip between bond positions and equity positions. And within equity, it's US equity versus local equity. So within equity, it's overweight US equity and underweight India for fairly long time, 1.5 years now. And between equity and debt, it's overweight long bonds. So we are substantially long 10-15-year bond in India and 30-year bond in US.
Looking at all of this, I want to ask you, how are you penciling in the calendar year returns and the financial year returns for the Nifty now? Do you think the best of the gains, whatever had to be made, are done and dusted? Are we in for a longish period of just consolidation in this range bound? And what is the overall expectation of where the Nifty will be by the end of the calendar year and by the end of fiscal year?
So basically, betting on 6 months, I am likely going to be proven wrong. I can only tell my positions to you that I think that next Diwali when we'll discuss, likely that Nifty will be lower here, is how I think of markets. But again, it's such a volatile asset class that I can be proven completely wrong. I am sort of fairly certain that at these levels, it is very likely that it would make very little real returns versus inflation or bonds. So that I'm more confident, and I'm also more confident that what other assets will actually make more returns. But yes, to stick my neck out, I would say that flat to lowish Nifty from here in Diwali of 2025.
Okay. Manishji, please pardon me for asking the next question. You've been underweight on Indian equities over the last 15 to 18 months, something that you've just mentioned. This has been a phase where the maximum money has been made by investors who have held on to their portfolios and people who have gotten at various stages over the last 18 months. Now this is in hindsight, which is a perfect science. it's worked out very well. You continue to advocate caution, which is fabulous, because at some point of time this party has to stop. How have your clients reacted when they see parallel PMSs giving great returns, or their own peer group in the ultra HNI segment making tons of money compared with what your PMS has given?
No, we don't run PMS, but to answer this question, there are two ways to approach markets. One, of course, to be cyclical, so in and out. So if you sort of look at our commentaries, and when I was with Birla, precisely in March 20, I would have suggested people to go substantially long on equities in small and mid cap. We got bearish in 2022. We thought that that is markets were too expensive. 2023 we got into US because Nasdaq had fallen flat dramatically, and that gave great opportunity. People who begin to sort of think outside of markets are actually not just in India, but everywhere. There are many opportunities, and Nasdaq of course has done as much and more actually than what Indian markets have done. So a cyclical guy would actually move in and out, leave some money on the table, but get into the next asset which will actually do reasonably well. So in aggregate, I've done very well. If you were to think of 3-year, 5-year cycle, have we missed the small cap mania that we've seen in last 12 months? Yes, but that's not even a mandate for a cyclical trader or a investor like me. Our idea is to generally outperform Nifty with a substantial margin by actually trading asset in and out that we've been able to achieve in last 3 or 5 years.
All right, Manish, do tell us, apart from equities and bonds, are you also looking at bullion commodities like gold and silver? Are you also bullish on real estate at all? How are you looking at these asset classes?
Of all the asset classes, I think bonds look the cheapest. Real estate is fine. Inventory levels are low, but given the macro, maybe the last 2-3 years of good run will take a little bit of a pause. Gold has had of course, huge rally, but for large money allocation, gold can't be more than 5-10%. So that's more like a protection. Everyone runs that, so that recommendation is always live, but generally won't add gold at this value, given that we may be entering in a phase where there could be instead of inflation, there could be a deflationary fear. So in general, it's a out and out long bond trade right now, along with of course a little bit of a private credit.
Right, an out and out long bond trade. Manish, because you come with a background in the AMC at Aditya Birla, would you suggest that sensible investors look at bond allocations via a mutual fund? If yes, what would you prefer, long date or short term for the government securities and AAA rated? And for private credit, I am sure there is a bond fund available in the Indian market, maybe outside the Birla stable. Could you just give us a hint? We'll track it down at our end.
So my suggestion is that if you want to buy long bonds, any of the income funds that any large AMCs offer, are dynamic bond funds, and there are very nice ones. You can look up for Value Research, Morningstar ratings, ask your advisor. I think those are the places to go to add duration. On private, I would advise income fund instead of gilt funds. If you really can't do anything else, of course, go to these 3-5 years flexi deposit. But I think bond funds will make more sense right now. As far as private credit funds are concerned, unfortunately, the access is limited to very large investors. Minimum investment horizon is 1 crore. We ourselves have launched a one fund, so you can reach out to us. But in general, there are many good private credit funds available in the market. Look for a good advisor, and he will guide you as to how to invest.
And my final question to you, when do you see the first rate cut happening in India? It's almost a given. that you will have a rate cut in the US on 15th of September, 15th or 17th of September. One, I want to ask you, is it absolutely given? And two, if it happens, when will India follow suit?
No, it's given actually. Actually, the US requires a 50 bit rate cut, but for political reasons, and of course, the fact that yesterday's core CPI was somewhat more elevated than what the market expected, you would likely get next week 25 basis point rate cut in US. Indian rate cuts are long due. Our core inflation is 3% or thereabouts. I think our economy is sluggish. So, you will soon have a Diwali gift for India. Many rate cuts ahead actually, and there is going to be relatively reduction in pain for folks who are paying EMIs or generally are there on loans. I wouldn't be surprised rates are substantially lower in next 6, 12, 18 months in India. Both bond yields, of course, I think will pierce 6%, will head towards 5.5% over next 2 years, 10-year bond. But EMIs and such likes also will reduce quite substantially. I won't be surprised in 2-3 years time. 2.5 years time, I would say mortgage rates actually go back to where they were during COVID times.
Right, Manishji, it's been an absolute pleasure to listen to your investment thesis of how the future looks and where money will move in. I remember a wonderful phrase which was, gentlemen prefer bonds, and possibly that time is coming not only in the US but also in India. We'll be in touch with you over the next 16-18 months or so, and let's hope that the bond part of your investment thesis works very well, but equities continue to give such fabulous returns as they have in the past. Markets, as they say, can remain more irrational than what we can remain liquid. But with that, it was lovely talking to you.
Ameen.
Thank you. All right. Let's start wrapping up the markets now, and that was a fantastic conversation with Manish Tangi. 25,000 is with us right now, 84 points higher in trade. The Nifty Bank 151 points higher at 51,161. Still looking decent. You can see the metals are still up 0.8%. Consumer durables have picked up pace, 0.7% of a move on that one. We are seeing the pharma index, FMCG, PSU banks also holding up, although they've given up a tad bit of the morning gains right there. But the sectors are still positive. I think autos is the one that's now slipping into the red. So some caution coming in onto that one as well. The top movers on the Nifty are Adani Ports, Apollo Hospitals, Shriram Finance, Bajaj Auto, Tata Steel and Bharti Airtel. On the downside, what's not doing well for the Nifty? Tata Motors yet again, after that sharp fall of 5.5% yesterday, it's again down by 1.1%. Maruti is down by 0.5%. Bajaj Finserv, Axis, ICICI Bank, M&M, Nestle. These are the counters that are actually dragging on the Nifty. On the F&O space, you have Oro Pharma, LIC Housing Finance, Trent, Oracle Financial Software Services also picking up pace. What's not doing well in the F&O? It's Granules, Vodafone, REC, JK Cement, PFC and Aarti Industries. These are the counters that are dragging right now. We are seeing some momentum dwindling. We are now below the 25,000 mark. Let's see how the day really pans out. It's also the weekly expiry of the Nifty, so we'll keep an eye. Stay tuned with us on Business Today Television. There's a lot of action-packed shows coming in on front of your screens going forward from here too. So stay tuned.
Well, hello and a very warm welcome to Business Today Television. I am Chetan Bhotani. Well, of course, the EV rage in India is ongoing, and I'm here at the Windsor EV launch, and I'm joined by the CEO Emeritus of GSW MG Motors, Mr. Rajiv Chava. Thank you, Rajiv, for speaking to us.